Okay, in this video, we're going to wrap up our series of ARC Section 90A for the review of financial statements. And we'll see in this video that there has been a new SSARS number 24 that was issued in 2018 that affects a few of the requirements of reviews and compilations. And so to see where all of these standards are for preparation, compilation, and review engagements, you can go to this particular URL right here, and it's all the AICPA standards related to SSARS. And up until this point, we have been going through ARC Section 90A, and that was after SSARS number 21 was issued. But now, SSARS number 24 has been issued, and it changes this ARC Section 90A to ARC Section 90. And there's only been a few changes, and we'll go through those shortly, and that's why we didn't do a video over ARC Section 90. We thought it would be easier to go through Section 90A and then say what makes SSARS number 24, what are the changes in it that turn it into ARC Section 90. And we'll see that shortly. And aside from changing those standards, a few of those, it also created a new ARC Section 100 that is related to what should we do in our review or compilation procedures whenever we're using international standards, for instance, IFRS or other international review standards. And so that's really outside of the scope of what we're trying to do and outside of the scope of this video currently, because we usually use GAAP and we use SSARS, and very rarely will our particular firm interact with any of the international standards as of now. So we'll leave that for maybe a future video. But for now, let's take a look at SSARS number 24 and see how it changes the review and compilation procedures. And we see that it's issued in May 2018, but down here on the bottom, we'll scroll down to the bottom of the summary here. It tells us the effective date. The effective date is for periods ending on or after June 15, 2019. So a lot of the review or compilation procedures that are engagements that we're entering into now probably fall into the realm where these changes are starting to take effect. So anything after the company that has a year end after June 15, 2019. But paragraph 39, the revision to paragraph 39 of ARC Section 90 is effective upon issuance. And we'll see what that is shortly. So let's go back up here. This little bulletin has done a pretty good job of summarizing what has changed. We see it's only two pages worth of items, maybe 12, 15, 20 bullet points, something like that, of changes. And we'll see that a lot of them are similar or operate in the same area. So first, it says that they created the new international reporting issues, and that's from the ARC Section 100 that we saw right here. They created that new one with this SSARS 24, and that would come into play when the financial statements are prepared in accordance with the financial reporting framework generally accepted in another country, so maybe IFRS or something like that. Or also, if we're using another set of compilation or review standards besides SSARS, so some kind of international standards for review and compilation engagement. So that's the ARC Section 100. If you are performing an engagement that falls into these two places, you might take a look at ARC Section 100. I don't think it's too long. ARC Section 60. If you've been watching our videos up until this point, we've been doing ARC Section 60A, which is basically all of the general principles for engagements performed in accordance with SSARS before these two revisions. And so the SSARS number 24 that we're going through now makes these two revisions to turn it into ARC Section 60. It can be found back here. We've got ARC Section 60. And so it adds a definition for the term fair presentation framework and amends the definition of financial reporting framework to include this fair presentation framework term. So that could be pretty useful for us to know the definition of it, not a substantially big change to the requirements in that section. They also add an A51 paragraph, so we know this is an explanatory paragraph, so not necessarily a requirement, but something to clarify. It says that this paragraph makes it clear that we may accept responsibility for the design, implementation, and maintenance of internal control. Or rather, if we are performing in a test engagement, so for instance a review, in this case, we cannot accept responsibility for the design, implementation, and maintenance of internal control because that's a management responsibility. And of course, I think we already knew that from our independence videos on independence and that sort of thing, but they just wanted to clarify in the explanatory material that that's the case. So these are two pretty simple, easy, not very big changes. ARC Section 60 general principles, and added a new Section 100 for international standards. And then here we've got the meat of the changes, ARC Section 90 for the review of financial statements, and that's what we've been going through. And we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 or 12 bullet points. And we'll see that they mostly all relate to the going concern assumption. So I guess the standard setters really sat down and decided that they needed to revamp the sections related to going concern. And so first, they revised paragraph 5 and A10, which is the explanatory material paragraph that supports that one, to provide a definition of reasonable period of time. And they use that definition for the going concern assumption because we're trying to decide, do we think this company is going to continue operating 1 year after the issuance of the financial statements? That's the typical definition of reasonable period of time is 1 year after the financial statements are issued, at least under GAAP. And so that's what they're making certain, thereby including this definition. Next, they revised paragraph 34 to include a specific written representation regarding the disclosure of all information relevant to the use of the going concern assumption in the financial statements. So in one of our previous videos, we discussed the representation letter and what needs to be included in it. And so in number 34 here, they included another bullet point that includes a discussion that management believes the going concern assumption that we have is correct, and they've explained everything to us about it. Also, paragraph 39, remember, this is the one that is active immediately. If we go to the effective date section here, 39 is effective upon issuance. So that was at May 2018. And it basically says that they revised this paragraph to make the requirements regarding contents of the accounts review report consistent with the illustrative report examples in Exhibit C of ARC Section 90. So remember from our videos that Exhibit C has some examples of review reports. And I guess the review reports and the illustrative examples in Exhibit C did not match what the requirements had said, so they've maybe revised the requirements and set paragraph 39 to match the illustrative examples. So now we're really getting into the meat of assessing or performing procedures around entity's ability to continue as a going concern. It says they added paragraph 65 to require us to assess whether the going concern basis of accounting is appropriate, obtain management's evaluation of whether there are conditions or events that raise substantial doubt about the entity's ability to continue as a going concern, or to determine if there are conditions or events that raise substantial doubt about the entity's ability to continue as a going concern, and management's plans to mitigate those matters. And so typically, well, at least in GAAP, this is a requirement. So I guess they want to cover their bases in case the financial reporting framework that is used does not require that sort of disclosure or procedures. They also want to make sure the adequacy of the related disclosures in the financial statements is fine. So maybe we can go take a look at this particular section to see what they're talking about. So we got ARC Section 90 here, and it said they added paragraph 65. And we'll see that this relates all to the going concern assumption. And yeah, so the account's consideration of an entity's ability to continue as a going concern. And this is the one we just read, where they added paragraph 65. But this was a section in ARC Section 90A. So I think they are just kind of rewording, rearranging a lot of things to make it more applicable to what we're trying to accomplish in the review. Let's go back here and see what else they have changed. They added some explanatory paragraphs, A116 to 117, to provide some additional guidance regarding this requirement that they just added. Also, they revised paragraph 65. I think this is paragraph 65 before they added this paragraph 65. So I think they just kind of renumbered a lot of the paragraphs. And the one that was previously 65, they rearranged it to say this statement. And I think now it's 66. Yeah, so now that's paragraph 66. And it says that if the applicable financial reporting framework does not include a requirement for management to evaluate the entity's ability to continue as a going concern. So we remember this one they added. They said if the applicable financial reporting requirement includes requirements for us to do these things, then you do that. But if the applicable financial reporting framework does not include a requirement for us to evaluate for a going concern, and in preparing the financial statements, we see that there are conditions or events that raise substantial doubt about an entity's ability to continue as a going concern for a reasonable period of time at the date of the prior period financial statements, regardless of whether the substantial doubt was alleviated by the accountant's consideration of management's plans or in the course of performing review procedures on the current period financial statements, the accountant becomes aware of conditions or events that raise substantial doubt, then we're required to inquire with management whether the going concern based accounting is appropriate, inquire with management about its plans for dealing with the adverse effects of those conditions and events, and consider the adequacy of the disclosure about such matters in the financial statement. So basically, whether our financial reporting framework tells us that we need to do this or not, we still have to do it under the review procedures. They also added A115, A116, and A120 explanatory paragraphs to kind of clarify what's going on here. Also, they added paragraph 67, where it tells us to add an explanatory emphasis of a matter paragraph in our review report if we conclude that substantial doubt about the entity's ability to continue as a going concern for a reasonable period of time remains. And we've also got some more explanatory material sections that relate to this one. Next, we have some revisions to the sections on restrictions to the use of the accounts review report. And so we did a video on that for ARC Section 90A, but they've apparently changed a few of the requirements in the 79 reference to the work of other accountants in an accountant's review report. So they added 78 to preclude us from referencing in the accountant's review report the review or audit report of other accountants if the other accountant's report includes an alert that restricts the use of such report. So we can't say in our report whether there was a restriction in the other report. They also revised paragraph 79 to include a requirement that the accountant of the reporting entity communicate with other accountants and determine whether the other accountants understand the ethical requirements relevant to the engagement and in particular are independent. And they also added some explanatory material sections A134 through A135 to support and clarify this one here. Also added paragraph 80. Let's see where that is. It's still in the sections about referencing the work of other accountants, and it precludes us if the component's financial statements are prepared using a financial reporting framework different from that used in the reporting entity. So we can't reference the review or audit of the other accountants in the review report if that other report is under a different financial reporting framework, unless one of these two apply. So that would be if we've determined that the measurement, recognition, presentation, and disclosure criteria that are applicable to all material items in the component's financial statements in accordance with the financial reporting framework used by the component are similar to the criteria that are applicable to all material items in the reporting entity's financial statements in accordance with the financial reporting framework used by the reporting entity. So if the financial reporting frameworks are similar, you might can reference the other report. Another such situation might be if the account of the reporting entity has obtained sufficient appropriate review evidence for purposes of evaluating the appropriateness of the adjustments to convert the component's financial statements to the financial reporting framework used by the reporting entity without the need to assume responsibility for, and thus be involved in the work of the other accountants. So we could just adjust these other financial statements to the financial reporting framework of the reporting entity, and then we wouldn't need to reference the other accountant. So that's the gist of SSARS number 24. Basically, adding a few definitions and clarifying a few things, plus really hammering in on the substantial doubt going concern assumptions, and revising a few of the sections on referring to other accountants in our review report. So if you don't have the situations where there's a substantial going concern doubt or components with other accountants performing work in those components, or performing a review or audit engagement or something of a component in your reporting entity, there's really no substantial changes that you should be worried about, and you'll probably mostly use ARC Section 98's requirements without any of these revisions really being applicable to what you're doing. And also, if you are using any international accounting or assurance standards, then you might take a look at this one. But that's about it.